Hey traders, welcome to Charts and Coffee. Happy Tuesday, everybody. Hope everyone is doing well as we slog on through this month of September. If you've been keeping up with some of let me head on over here. If you've been keeping up with some of the videos that I've been sharing at the Simple Trading YouTube channel, also my YouTube channel, if you've been checking out some of these videos, you know that we've been talking about the extremely high likelihood that the way that August behaved, due not only to look, gang, at the second half of August, that's where summer is reduced to, right? If someone's going to take a vacation, it's the second half of August. The last week of August is the absolute lowest volume, lowest attention, just low everything. Everyone's checked out. It's just a terrible month in terms of looking for attention in the markets. And so we know that we're going to end up with these sort of wayward, choppy, sort of jousting kinds of moves. But then, we always hope that once the fall trading season begins after Labor Day, things will resume more of the kind of action that we all want, which is a little bit more follow through. Maybe not the uptrend of July, maybe not the significant moves of other months, but rather just a little bit of follow through, 1 to 2, 3, 4 days. Still not seeing that. And when we step back, we take a look, and let me grab my drawing tools here, just so you know why we're taking the kind of approach we're taking, why our expectations are for follow through are very low. It's just what the behavior is. So when I take a look at what's happening in August, this is no surprise. I mean, that's August, especially the last week. Things can get really wonky. And actually, let me do the 5-year look back. It's even more. It's even more representative of what we dealt with. I mean, doesn't that look and feel like August? That's exactly what we dealt with. Okay. But then when you start to get into September, at least the first half anyways, it's still very much reminiscent of that back and forth that we saw for most of August, right? So this is why, as we go into the first 2 weeks of September, as we know we're waiting on whatever clarity about the budget is ultimately going to be determined, we're going to deal with CHOP. We're also waiting on CPI data this week, which is going to, in many ways, map to, so the CPI data we get this week is going to map to the November or December meeting and whether or not we still get a 1/4 point hike. We're not sure about that. Gang, that's macroeconomics. What is the rate of change in jobs, in inflation, and how does that map to ultimately what the Federal Reserve is going to decide to do? And as long as there's a huge question mark lingering over all of this, it makes sense to focus on short-term timeframes. And that's a big reason why, I persist in looking for those AM day trading, PM day trading, even introducing some scalping into the sector secrets mastery. So that's what we've got right now. By the way, this again, for those of you wondering, what are we looking at again, Rog? This is the seasonal trend for the S&P. So this is what we're dealing with. Now, what about today? Well, today we do not have much by way of the economic calendar. Once again, a very quiet day. However, let's take a look at a couple other things. If I take a look at the afternoon session, notice that we do have the 10-year bond auction, which could be, as far as hot zones go today, this really could be the only one. Again, scheduled high impact, high volatility events. This is pretty much going to be the only one. But remember, the market knows, we all know, we scroll down the calendar just a little bit more, and here it is, right? That CPI release. While this is not the Federal Reserve's favorite, that's PCE, this is going to be hugely impactful to what we believe the Federal Reserve is going to be allowed to do, pause, or forced to do, hike. So this is huge, gang. Tomorrow at 8:30, big data release. And so we're going to continue to operate through the week knowing that we have another 2 hot zones in the U.S., PPI, retail sales, and the University of Michigan inflation expectations. And mixed into all of this, I do want to remind my treasury and currency traders. So if you're playing bonds, if you're playing euro, if you're playing dollar, anything related to that, remember ECB press conference and the monetary policy statement coming out on Thursday. So this is going to affect the dollar. This is going to affect yields, right? There's a lot that will be affected by a significant central bank event. And then, of course, this is happening right just in front of the meeting for the U.S. Central Bank, the FOMC, on the 20th. All right, so that's what we've got right now. If we look at the big picture, now we get to zoom in, right? Now we get to zoom in. So as always, thank you for being here for Charts and Coffee. Let's jump into the questions. All right, so let me grab the chart that I want. And where is it? There it is. All right. I know a lot of you are probably very familiar with much of what's on these charts, especially by way of the 5-minute chart and our hourly price movement ranges and our multi-trend and all that good stuff. All right. First up from our YouTube channel, Jim asks, what time do I use a close? What time do I use as the close for the indices? This is what I'll do, Jim. What I do is really simple. I use the open, high, low, close on toss. This is just a 4 p.m. is really what I like. So there used to be a futures nap, as I used to call it, between 4:15 and 4:30 Eastern, right? So that used to be something that we used to experience as futures traders, right? So kind of 4:15 close. But I use the Wall Street close. That's the best way to do it. And then I'll use the daily time frame on the toss just to look at the high, close, low. But 4 p.m., yeah, the Wall Street close. Thanks for the question, Jim. All right, next up, what is the trend for the SPY for intraday, please? Hey there, JRH from our Essentials room. So what is the trend there? Sure. So if we look intraday, my preferred time frame for the day trades intraday is a 5-minute. Now, of course, we could look at 15, 30, 60. So barring any specificity, JRH, I'll just use the 5-minute because that is what I'll do when I'm day trading in the mastery here in just a bit. All right. So when it comes to SPY, here's what I'll tell you. And JRH, think about this for a moment. It is right now 9:08, right? It's 9:08 in the morning. The bell's not going to ring for another 22 minutes. You know what has been already trading, and I mean in a very liquid manner, is the ES. So if I'm looking at what kind of trend am I going to inherit on the S&P at the bell, while I will very likely be setting up the SPY via options because they're scalable, they're affordable, they're a better set of training wheels for traders who want to eventually trade things like the ES futures or even the SPX. Start with the SPY options. It'll train you to deal with more volatile versions of the S&P market. I'll go to an ES futures 5-minute time frame. So this is where this contract's only closing for 1 hour a day for settlement purposes, for accounting purposes. So JRH, what I'll tell you is look at the 5-minute ES and then let that guide you to what you might want to do with the SPY. And right now it's solidly neutral. It's just solidly back and forth neutral. So is there a trend? Right now it's chop. So we'll look for overbought, oversold setups. And there's nothing really better than a good old fashioned slow stow. Gang, this is a free indicator, right? You can go on your platform and pull up a slow stow. Now, I have a custom slow stow. It's still the free slow stow. I just have simplified a few of the things on a slow stow just for these very, very nearsighted eyes. But it is a 21K 3D slow stochastic exponential. Nothing held back here, gang. Total transparency. 21.3 exponential 80-20 overbought, oversold. Put it on your chart. Listen to me now. Believe me later. It is the absolute very best overbought, oversold. The secret sauce is the 21.3. I have slowed this thing way down for the better part of 25 years, and it just works. All right. So in this environment, definitely slow stow. And what I mean, this environment, the multi-trend is yellow. That's how easy it is to say, wait a minute. In a non-trending environment, yellow, multi-trend, I know to go grab my favorite oscillator, right? How cool is that? Okay, next up is, good morning. And Christian asks, wanted to know more about my process when I choose to focus more on day trading versus swing trading. Really simple, Christian. So if you take a look at that, how we opened up with the show, looking at the seasonals, expected chop, we are in chop, right? I don't have to guess at chop. And I have a candle. So most traders since the beginning of trading use 3 to 4 different simple moving averages. And when they cross, we will say something's trending or not. But the shortest of them is usually a 20 period, which means it needs 20 closes before it changes its mind in a significant way. I do not use anything quite as slow. While those are effective, they're lumbering, they're delayed. A more sort of real-time candle by candle assessment is by using 4 moving averages, shorter in nature, color coding their relationship to one another. When that is yellow trend, I know I have less likelihood for follow through, and I know that I need to shorten my time horizon, shorten my time frame. So market structure, Christian, is always going to be the first consideration. What is the environment I'm trading? You add to that the expectation, because that's all a seasonal is. It's a tendency, it's an expectation. You add to that the expectation, Christian, of the seasonal. That adds even more. You look at the way price has been moving, and it becomes really blatantly obvious that either short-term swings, 1 to 3 days in nature, or day trades are the way to go. And why? Because those are the two most, for me, nimble types of approach. One can be on a 60-minute time frame with overnight exposure for traders who are comfortable with that, and for day traders who just want to trade today. I wish day trading was called today trading, because that's what it is. I just want to trade today. And it might even be morning and afternoon. That'd be another way to look at it. Each day trading day is actually 2 days, at least, right? At least. And so if I treat each part of the day as 2 different days where sentiment and momentum and trend could be completely different, I'm going to find more opportunity, but I'll be able to keep that shorter term time horizon and do the only thing that day trading really means, which is I'll be flat at the end of the day. All right. Next up is, bear with me here. How is the, hey there, Mimi. And thank you, Philip. I appreciate that. Mimi asks, can I see how the RTY is looking this morning? Absolutely. This is Charts and Coffee after all. All right. So this morning, again, barring any specificity to time frame, I'll just go to the 5-minute for a this morning assessment of the morning, right? Quite literally the AM session. Neutral, choppy, slow stochastic environment. No different really than what we looked at on the S&P earlier, from the SPY question from, who asked me at the SPY? Sorry, it's escaped me. Yeah, from the SPY, JRH's question. Yeah, Mimi. So same thing as JRH's question, Mimi. RTY is in chop. Notice a few other characteristics of chop, because this is where the toolkit comes together. Multi-trend, yellow. Look at the lower row. Look at the color of my candles. Red, blue, green, dark red, dark blue, dark green, light. All the different indicators based on the color coding of the grab candles, green, red, and blue. It's just an acronym, grab. Based on the grab candles, tell me, this thing looks like Skittles. It's all the colors. And when we have that, we lack the consistency of a single color, we know that we don't have a trend. It's impossible for an uptrend not to be dominated by green grab candles. It is impossible. And I do mean that. I do mean that very much in a black and white way. It is impossible for a downtrend not to be dominated by red grab candles. Now, if you step back and look at most of what's been happening since 7 a.m., what's the most common color since 7, which I would sort of loosely consider the US Open? Red. So I'm slightly bearish. Why else would I be slightly bearish? Well, there are a number of things that I will look at on the daily time frame. And there are key things that I'll look at on the daily time frame of not only the RTY, Mimi, but also of the KRE, right? There's a number of things that make sense to track. And a lot of that's gonna map to how is today's session responding to levels that occurred yesterday. So you can take a look at the daily time frame, which is the time frame over to the right here on your screen. And you'll see that there are certain levels on the daily that I have drawn in, and they're going to give me some reference to where we are in relation to yesterday. And where we are in relation to yesterday is actually relatively bearish. So you add the 5-minute bearish grab candles, you add the daily time frame and this bearish stance in relation to yesterday, and I'm a little bit more bearish. I'll be a little bit more keen on overbought shorts at levels of resistance. And there are a few. I know some of you who took the class are already saying, Rog, I see some already on our automated tools. Right, you are. Okay, awesome. All right, moving on. D. Bolton, I haven't traded Bitcoin in forever. Yeah, I'll be straight up. I haven't looked at it really that much. Not that I have anything against it. Once upon a time, the volatility was great. The liquidity on the Bitcoin futures was pretty solid. And I was far more active in it. And it really, for me, is an extension of Forex trading. There's Forex, foreign exchange, a spot currency market. And to me, Bitcoin is the reserve currency of the digital Forex market. But I don't do as much actively in currency pairs anymore. I really haven't looked at it. And I'll tell you, frankly, you know me, I talk my book in any session I'm in. When I'm doing a webinar, I'm talking my book. When I'm doing a session like this, for the most part, I'm going to talk my book. My book could be the actual positions that we've been taking in the mastery. My book could be the way in which I'm viewing the current marketplace and how I'm setting up trades. And so if I don't really intend on ever trading Bitcoin, or if I don't feel the current environment is something that's going to drive me to Bitcoin, for me, the idea of it right now is I think there are other better places to look, but I'll look at it. I haven't in a while, so I'll be happy to look at some point. We'll come back around and look at it, but for now I've been leaving it alone. Philip asks, what do I think about Microsoft intraday for a short-term swing? All right, so if we're looking intraday and Microsoft, that's going to drive me to a 60-minute time frame and the daily price movement range. And right now, the structure on the 60-minute is beautiful. It is green. It is an uptrend. And that means if I can get a pullback to the daily price movement range or other levels that I would use as valid support within the context of the 60 minutes uptrend, intraday, overnight exposure, which is what swing means to me. So intraday would be 60. Overnight exposure is the swing. So I'd look at that and I'd be open for a buy. I would need a little bit of weakness, but I'd be open for a buy. But please keep in mind, gang, we're coming up on some significant trading on Friday, right? I mean, think about what's going to happen this Friday. It's huge. It's not just any options expiration. This is the witching variety, right? This is the witching variety. So we have a lot of volatility coming up. We have a lot of rollovers from contract to contract coming up, and high concentration weighted stocks like Microsoft are going to ultimately get caught up in these rollovers. And for those of you that are not familiar with the terminology rollover, when we go from the current U or September contract in the S&P and move out to the December contract, also known as the Christmas contract, the Z futures, so ESZ, NQZ. When we move out to that Christmas contract, the December contract, we will be seeing a different value on the NASDAQ, S&P, Dow, Russell, and high concentration weighted stocks are going to move with that. So be careful for that Friday. It's not simply, well, we've already had the roll date, by the way, that pit date where we move from contract to contract. We've already had that, but just be aware of those rollovers. They're going to be fairly significant, and they're going to move sectors and stocks in their wake. All right, gang, and just like that, that is a wrap for charts and coffee, or charts and espresso, but that doesn't roll quite off the tongue in the same way. I hope everyone has a wonderful day. My futures folks, my mastery folks, I will see you in a moment. Be good to each other, gang. I'll talk with you soon.